Hello, I'm Greg Lawson. I'm a Texas realtor. I work primarily in the San Antonio area, and I've got a fantastic video for you today. I'm going to give you some valuable information if you're even thinking about possibly wanting to own a home. You're going to want to watch this video. I've got two things I want to cover with you today. First of all, we're going to talk about interest rates. Interest rates may not be as bad as you think, and I'm going to tell you exactly why I say that. And the second thing is, what do you need to be doing if you want to become a homeowner? I believe anybody can be a homeowner. It just takes knowing what to do and preparing yourself, and you can be a homeowner. And I'm going to show you how, and I'm going to do it right now. All right. So if this is your first time to my channel, please subscribe and then hit that bell and you'll be notified when I post another awesome, informative video. And let me tell you, not only do I like to post informational videos for you, I love to take you out into the different neighborhoods and areas in and around San Antonio, show you what they have to offer, show you the homes, the prices, show you the shopping, the dining, and whatever else is interesting in that area. I want to show it to you. That way, when you decide you want to make a move, you're going to kind of know what you're getting before time. All right, so let's talk about interest rates. I really have some pretty good news for you on interest rates. We all know the Federal Reserve has been raising the prime lending rate over the last few months. And they've raised it 4 times. And so, yeah, mortgage rates have gone up since the beginning of the year, right? Oddly enough, in the last couple of weeks, interest rates have gone down for mortgages. We had hit a peak of about 6%, and then it dropped down to around 5.5%, which was great, right? And then just 2 days ago, I was watching Good Morning America, and they announced that interest rates were once again below 5%. And I thought, wow, that's fantastic. So if you've been thinking interest rates are too high to buy a house, let me tell you, 5% is a pretty fantastic interest rate. Of course, it's not the 3% that we were seeing at the beginning of the year and last year. But that was really a one-time historical low kind of a rate. I had never seen rates that low in my lifetime, and I'm in my 60s, right? So you'll probably never see rates that low again. So don't wait thinking those rates are coming back, because you're going to miss out, and you don't want to miss out on owning a home. There's a lot of good reasons to own a home. And let me show you why I say 5% is a great rate. So this is what a 30-year fixed rate mortgage has been costing people over the last 50 years, right? So back here around 1972, you can see we were at 7.5%. And then from there, it started to go up. And it went up and up and up. There are some dips in there, but for the most part, it continued to go up until it hit like 18%. And I've heard people say they paid more than that for their mortgage. So now that is a high interest rate, right? 18%, wow. But since then, when was that? That was 1982, 1983. They've started to come down. They have steadily come down slowly over time until we got to that low that we saw earlier this year and late last year, where it was 3%, it even dipped below 3% into the twos for a while. But right now we've started to rise back up. But again, it's dipped from this. This is an old chart. I printed this out a couple weeks ago. So it has actually dipped some from there because this is showing at about 6%. And like I said, we're down to about 5% right now. So as you can see, historically, we've averaged, if you were to take all of this and average it out, you'd probably be in the 7.5% to 8% range, right? So we're at 5%, well below average, and it's still a fantastic time to buy a home. So don't be discouraged because you've heard interest rates are on the rise and homes are going to be too expensive. Don't be discouraged by that. Interest rates are still good. Just buy what you can afford. Yes, you may be able to afford a little less house at 5% than you could have afforded at 3%, but that's okay. I mean, still, it's always better to own than to rent, and get the house that you want, because that's the main thing. Get a house where you and your family are going to make some memories and you're going to be happy. Your children are going to grow up, and that's the thing that really matters, right? So, think about that. When your kids are grown and you're reminiscing about the memories you had in your home, you're not going to be talking about, well, but that interest rate was 5%. So don't let that discourage you. So that's my first topic, interest rates. And I really think that's some pretty good news right now, but you don't want to hold off if you're really thinking about buying, because the Fed is going to continue to raise the prime rate, and at some point these interest rates will have to respond, and you will see them spike. Okay, so we can get you locked in. If you act quickly, we can get your rate locked in so you can find a home. So think about doing that. All right, the next thing we're going to talk about is, what do you do if you want to own a home? Maybe you've never owned a home before, so what do you need to do to own a home? Well, like I said, I believe anyone can own a home. I remember one time I sold a house to a young married couple. She was just 18 years old and he was like 19, I believe. I'm pretty sure he was 19. It wasn't a fancy home. It was a small home, a starter home. But they had a home and they were home owners. Now, this was probably 10 years ago. If they're still in that home, it's probably worth twice what they paid for it back then, if not more. But get a home. Anyone can own a home. It's way better to own than rent. Start building equity. Equity is an amazing thing. When you're renting and you decide you want to move, you have to cover that cost of moving, and you're not going to get anything back from that landlord that you were renting from. So when you purchase a home and start to build equity, then you can sell that home and use that equity for your next move. That's huge. It can really add up. My wife and I have probably close to $200,000 worth of equity in our home right now, and we've been here for actually 2 years this month, just 2 years. But we put some money down on it, and the money that we've been paying on it for the last 2 years adds up, and the value of the home has increased in that time. So all of that adds up. So if we needed to move or wanted to move, that $200,000 would definitely come in handy, going towards our next home. So get whatever you can afford, and then you can always move up from there. So what do you need to do to be getting prepared? First of all, figure out how much you can afford. So the thing of it is, interest rates are high, yeah, But rent is high too. Rent has been going up a lot as well, and you have to live somewhere. So shouldn't you be trying to own rather than rent, right? So figure out how much you can afford, and you can calculate from that how much home you can afford to buy. You know, how much of a monthly payment can you afford to make? And there are calculators on every real estate website that will tell you about, you know, what your payment will be and that kind of thing. So figure out what you can afford. And then next, you definitely want to take a look at your credit score. That's important. First of all, you know, you're going to have a halfway decent credit score to qualify for a mortgage, right? And also, the better your credit score is, the lower interest rate you're going to get. So you want to work on that first, because the difference between having a credit score of, say, 720 versus 620 can mean a lot of money. So you want to work on your credit score. That's very important. And we have free credit repair programs. You can contact me and I can get you hooked up with someone who can help you with that. Like I said, it's free. So, I mean, there are people who will charge you a lot of money and say that they will help you get your credit score up. But I can help you get it done for free. So contact me if you're looking to buy a house, and I'll get you into a credit repair program that won't cost you any money, and we'll get that credit score up for you, okay? So the next thing is you want to start saving money, because there's a lot of expenses, especially if you've been renting and you don't have any equity anywhere. You're going to have to come up with a little bit of money, because there's closing costs, there's down payment, and then there's going to be the expense of moving. So you have to take all of that into consideration, and you just want to start saving some money. Now, there are first-time home buyer programs, down payment assistance programs that can help with that. A lot of times with my buyers, I try to get the sellers to pay a lot of your closing costs, as much as I can. And for a while, it was such a buyer's market that sellers weren't paying anything. But the market is kind of shifting back to the point where houses are staying on the market longer. And so we may be getting back to the point where we can get the sellers to pay some closing costs. They can be a little more negotiable when that house has been sitting on the market for 2 months or so, So that everything is negotiable, right? And as a long-time realtor, I know how to negotiate to get as much as I can for my buyers. So that's pretty much it. You're gonna need to know how much you can afford. Then you're gonna work on that credit score if you need to. If it's if you've got stellar credit already, wonderful. And you're gonna want to save up a little bit of money. Okay, so once you do that, you're gonna be good to go. We're gonna get you into a home, and it may be a starter home, depending on what you can afford, but that's okay. Again, you're gonna build some equity in that home, and you're gonna be able to use that equity to move up to a nicer home, a bigger home, a nicer neighborhood, whatever it is that you want. So, but you got to start somewhere. So let's get you out of that apartment or that house that you've been renting for the last 3-4 years, just throwing your money away, and we'll get you into something that you own, that you can start to build equity in. And that's it. That's it for this video. I appreciate you for watching. Again, you can contact me. My contact information will be in the comments section below. But once again, please subscribe. Please hit that bell notification. And if you see some value in this video, you might want to share it so your friends can get some value from it too. All right, you take care, and we'll see you in the next video.